here, your tutor. We continue with stock valuation. We have looked at FIFO. Now we're going to look at LIFO, method of valuing stock. Okay. Here we go. The question we're looking at is as follows. Daniel Dakar is an accountant working for ZAM Book Center, ZBC. He is in charge of inventory management for ZBC, and one of the books he keeps in inventory is a receipt book used by different districts in his territory. Mr. Dakar conducted inventory taking on December 31st, 2021 in the presence of the external auditors, and it was discovered that Mr. Daniel Dakar's bin cards were showing that he had 500 receipt book, while the actual receipt books counted were only 450 at the total cost of $4,500. Auditors requested the organization to amend the records accordingly to ensure that there were no misstatements in the inventory records. Okay. The questions we are answering are as follows. To value stock using FIFO, secondary LIFO, which is the method that we're looking at. Okay, and this is the way in which we follow about valuing our stock using LIFO. Okay, similar to what we did when we valued the stock using LIFO. Okay, we draw the table. So the table will have 4 sections. The first section is a date section, okay, which shows the records when the transaction happened. The second section is the purchases section. Under the purchase section, you have to show the quantity of the item bought, at what price each unit is valued at, and the total value of all the units. The third section is the section for sales. What you issue out, similar to purchases, you need to show the quantity of the item you have issued out, what price each unit of the quantity is valued at, and the total value of the unit. And then you have the balance sales section. Here it shows what amount of units are still in stock, how much each unit is valued at, and the total value of that unit. Okay, like I mentioned earlier in the first video, the stock is valued at cost. So you need to make sure that even as you value your stock in these records, you use the cost price. Never use the selling price. Okay, so now, where did we get the records that I've put in this first row here on the 1st of January 2022? Okay, so this information that you're seeing here, we've gotten them from the question here, which says that on the 31st of December 2021, there was a stock count that was carried out, and Mr. Dakar's bin cards were showing that the stock at hand were 500 receipt book, but the actual count showed that the total receipt books were 450. It therefore means that 50 receipt books were missing. As a result, I will record them here under the issued column at the value of the 450 items, because this is coming from this batch here. Okay, so what we have been told here that the 450 receipt book, they are valued at 4,500. Okay, so in order for us to find the cost of these 450, we say for us to find the value is price times quantity, which will give us 4,500. Okay, our price we don't know is X, but our quantity we know this is 450. 450. We're multiplying by x. This is x times. It therefore means that we have 450 x is equal to 4,500. We divide this by 450. Here 450. Therefore, our x is equal to 10. Okay. To mean therefore that the opening stock is valued at $10. Okay. This is the reason why the missing 50 receipt books have valued them at $10. Okay. Now, the actual stock, the actual opening receipt books number is 450, valued at $10. You multiply 450 by 10, it gives you 4,500. Thereafter, you go and check the transaction that happened during the month of January. So we are told that the supervisor provided Daniel with additional information in January 2022, which showed that on the 5th of January, the organization purchased 2,000 items valued at $24,000. Okay. Now, remember, we're using LIFO, first in, first out. So before you record the transaction that happened on the 5th of January 2022, first you need to take note of the opening balance as at 5th of January 2022. So on the 5th of January, before buying 2,000 units, we had the 450 items coming from the previous date, which is the 1st of January 2022, valued at $10. On the same date, on the 5th of January, we bought 2,000 units. They were valued at $24,000. For us to find the price here, we divided 2,000 into 24,000. It gave us $12. Okay. You bring it here on the balance column here, where you show the stock that you have at hand. So as of the 5th of January 2022, we had one batch which had 450 units valued at $10 each. And then we have another batch of 2,000 units valued at $12 each. These are the values. So as we are closing the date 05/01/2022, this was the stock at hand. There was another transaction on the 10th of January 2022. As you can see from here, on the 10th of January 2022, the organization sold units of 1,500. Now, you need to take note that we are selling these units 1,500 from the stock that we have at hand. Now, you need to ask yourself, what do we have at hand? So what we have at hand is before the 10th of January is two batches of stock. We have batch 1, which is 450. The stock is valued at $10 each. Batch 2, we have 2,000 units valued at $12 each. Okay, this was on the 5th. Now, on the 10th, we have to sell to a customer who needs 1,500 units. But remember, the principle we are using to issue out stock to a customer is LIFO. We'll start to sell the stock that came in last, and then we start to sell from the stock we bought first. So if you check from here, the stock that came in first is 450. The stock that came in last is the one from a batch of 2,000 units. So it means therefore that the 1,500 that the customer wants will get it from this batch of 2,000 units. Okay, and remember, stock is valued at cost, therefore mean that the 1,500 you get from this batch, it will be at this price per unit, $12. This is why I've come here and pick 1,500 units from this batch at $12, giving me $3,000. Now, this is the stock that I have at hand. I've issued the 1,500 units from this batch. It therefore means that this batch here is still intact. I still have the 450 units at $10. From the batch of 2,000, I've issued out 1,500. It therefore means that I'm remaining with a 500 units valued at $12. Great. I'm done with the transaction on the 10th of January 2022. The next transaction happened on the 15th of January 2022, and the organization bought more units, bought 3,000 units. These units were valued at $45,000. Okay, we proceed to record this transaction here, and it will appear like this. On the 15th of January 2022, the first thing I'll record is my opening stock balance as at 15th January 2022. So I'll check what stock I had before this date. So before the 15th of January, the stock I have a batch of 450 at $10, 500 at $12. These are the ones that I bring forward here, $450, 450 units at $10, 500 units at 12. On the 15th of January, I bought more units of 3,000 units. They were valued at $45,000. For me to find the price here per unit, I'll divide 3,000 into 45,000. It will give me $15. It means therefore that one unit from this batch of 3,000 is being valued at $15. Okay, I have these two batches as my opening balance on the 15th plus the 3,000 units that I bought. It means therefore my stock at hand on the 15th of January 2022 is as it is here. After recording the transaction on the 15th, I need to check what happened on the following date. And the date that followed is on the 20th. On the 20th of January 2022, the organization bought more units, or 500 units. These 500 units were valued at $10,000. Okay, so when I'm on the 20th, I need first to record my opening balance on the 20th of January before recording the new item that I purchased. So the opening balance for the 20th of January 2022 will be the stock before the 20th of January. So before the 20th of January, my stock were 450 at $10, 500 units at $12, 3,000 units at $15. These are the ones that I brought forward on the 20th of January, plus this batch of 500 recorded at $20. Now, from the 20th, the next transaction happened on the 29th of January 2022, and this was a sale of 2,500 units. Okay, so on the 29th, I need to sell 2,500 units. But remember, the method we are using to issue out stock is LIFO, which tells us that we need to sell first the units we bought last. So if you check on the 20th of January 2022, you find that the units that we bought last were 500 units at $20 each. And the total amount of units that we're issuing out to a customer is 2,500. Therefore, that I'll start first to give a customer this batch of 500 units at $20. From a 2,000, after giving a customer 500, I'll remain with a 2,000 units to give to a customer, and that 2,000 units, I'll get it from this batch of 3,000 units. And this batch, the stock is valued at $15. Okay? 15 times 2,000, it will give me 30. Now, my closing stock here on the 29th of January, I'll have this batch of 450, which is still intact because I've not issued it out. This batch of 500 will remain intact because I've not issued that. From this batch of 3,000, I got a 2,000 from it. It therefore means that 1,000 is remaining at $15. I multiply this by these prices to give me the value of stock. It therefore means that the closing stock in the month of January 2022 using LIFO will be 4,500 plus 6,000 plus 15,000. This is what I've demonstrated here. 4,500, 6,000, 15,000, which comes to 25,500. Now, remember that from the question, we are told that the records for Daniel Daka, the accountant, was showing the stock, the receipt books in stock were 500, but the count showed 450. It means therefore that the 50 receipts book that are missing will be expensed in the profit and loss, and the 50 receipt book will be valued at $10. Thank you very much. This was your accountant tutor, Daniel, bringing you accounting